How's it going, guys? So it is 12:30. We're right upon the new year of 2024, and I wanted to discuss a couple things here regarding the S&P and the market, and where I think some of the best areas that I'm going to be putting my money is in areas that are safe. Are dividends safe if the market collapses because you get a dividend? No. If it drops, the market drops, 30%. Because you get a 3% dividend isn't safe. Yeah, it's going to be buying the dip, but whatever. I don't know why people say that. Should a dividend investor be, if I'm a dividend investor, should I be dumping my holdings because it's going to drop? No, I can just hold it and keep adding. So it's going to mess with your taxes. But anyways, let's take a look at I'm going to do some analysis on SPY as well as the US dollar and a dead giveaway here that I see. I can never be, and no one can ever be 100% sure. You can be very close to it, but I'd say the likelihood of the S&P going down here is pretty high from what I'm looking at. So let's just go ahead and right off the bat, we've got bearish divergence on the RSI on the daily. RSI is at its peak right here. Okay, match it up. RSI is at 81. The S&P is at 472. We shoot all the way up over here to 476, and RSI is at 72. It's 10 points lower. RSI is trending down, and SPY is trending up. And take a look at this. What do you see? Ooh. It doesn't look very good, does it? Remember VIX? Those of you that are in the Discord, remember I was like, wait a second, something's going on with VIX and UVXY. How come they're shooting up and the market's going up? That is one of the dead giveaway indications. When you can assume when SPY and UVXY, I like using UVXY, they move in the same direction, SPY will do the opposite. They're both moving up, SPY's probably going to go down. Both going down, vice versa. So I'm not just going to trade simply off that. I have to use it's all about probability. Right, counting the bears. Pretend there's going to be a fight with bulls and bears in the ring. How many bears do we have? Well, VIX is running up. We've had some massive pullbacks that were ferocious, and we had one on Friday, the last trading day of the year, where it just went very, very hard down and didn't recover and suck back up, which if it went down like that, it always popped up almost immediately. When there was quick movements, and there was no pop on this drop over here. It was terrifying. Last time it did that was at the brink of COVID, the COVID collapse. I'm not saying the market's going to do that. I'm just saying I've never really seen anything good come of it after that, unless it was just a bond auction or something like that, a bad bond auction. We're popping out of this right here. We've got a bearish pattern and a break. We have a volume gap down here, and we also have gaps all the way over here on the S&P. Do I think we're really going to come to 423 in the next month or two? I don't. Do I think that we could fill this gap down here later on in the year? Absolutely. 423, we shot up. We got to where we were. We were just down here in November. It's December right now. It's a little over a month away. We shot up that fast in a month. We've had one of the best runs on the NASDAQ since the late 90s. Just looking at that headline, I can tell there's probably going to be a pullback. And this run up in 2023, a lot of it was due to the anticipation of rate cuts towards the end of the year, right here, as well as stock buybacks. A lot of that was stock buybacks. And AI drove a lot of that stuff up too. But just look. Do you see any bulls here? Yeah, we got rate cuts coming, but that's already kind of priced in. Right? Before I get to that, let's just count the bear. Do you see any bulls? If you see any bulls, comment below. I don't see any bulls. Where? We got a bearish pattern. We got a massive volume gap, and we've got 1, 2, 3. I mean, there's 0 bulls and 3 bears. Let's get to the 4th bear. Those of you guys, unfortunately, I can't look at Dixie on here, on TrendSpider, but this will do. UUP. Look at the massive drop on the dollar. Now it has a gap fill for the way up. Do I think the dollar is going to completely recover? Absolutely not. What is that, a hammer right there? It is. Look how low the RSI is. We're probably going to pop up. So now I'm at like, what, 5 bears and 0 bulls? We've got one bull, the fact that we can cut interest rates, but that's already like priced in somewhat. Or can you even count that as a bull? So we got like 5 bears versus one kind of bull. Things aren't looking hot here. So that's a hammer. And when you see a hammer, when I see candlesticks on the weekly, they usually play out. Just like this little doji down here, where we had a reversal, pretty much a shooting star and a hanging man we reversed. Inverted hammer down here, and we shot up. This is a bad example because this is a bullish, this is UUP. If we were using an equity, a bigger one, it would be a better example. Big names, top 10 holdings of the S&P, those stocks, when they get candlesticks on the weekly, it usually stomps most indicators. I mean, it's just that accurate. Not always. It isn't 100% accurate, but it's up there, especially when there's a massive gap like that, and then we form pretty much a hammer right there. That's a hammer. So you want the wick to be twice as long as the body. I'd like that body to be a little bit longer up there and there not to be a little bit of a wick up there, but that's okay. That's going to qualify. So the market runs inverse of the dollar 9 times out of 10. Dollar drop, market ripped. Dollar has a reversal. RSI is really overbought. It hasn't been this bad since 2017 with the RSI being that low. That's because we went so fast. We could have a nice pop-up over into here to 27, I think. The high 27s on this. And that would be enough for... That's almost a shooting... That's pretty much a shooting star right there. I didn't even see that on the weekly. I have these highlighted right here for the Z-Trades EDU, by the way, showing rate hike and rate cut cycles. But that's pretty much a shooting star right there. We've had 1, 2, let's go ahead and remove this. 1, 2, 3, 4, 5, 6, 7, 8, 9 straight weeks. I mean, come on. There's got to be a pullback in there somewhere. Let's go hang out on the 4-hour and just see what I see. Nothing too spectacular here, but the daily is pretty much a dead giveaway. I also, when it comes to rate cuts, I do believe this will be a buying the anticipation and selling the event type scenario. Unfortunately, I do see us dropping with rate cuts. This was the growth for rate cuts right here. And I believe there'll be a heavy pullback at some point in 2024. Do I believe it's going to be Great Depression levels? No. That's a whole separate video to explain why the Great Depression was so bad when you could use stocks as collateral to get 10x leverage of stocks. So when you sell, you're selling 10x, which makes the market crash 10x harder. And that's when all the laws came up. You Series 7 holders know what I'm talking about, all those laws that popped up after that in the 30s. So, no, I don't believe the doomsday YouTube videos where it's just clickbait that it's going to be the Great Depression. I do believe we are definitely going to have, there's got to be something that gives after this massive run like this, and I think that will be it. You know, a run from I remember it being 217 when they halted the market down here, and we rallied up to 480. You know, we had somewhat of a pullback, not too much. But I believe 2024, there's going to be some bear cycles and some bull cycles. I don't expect it to be too violent in either direction, but I do expect 2024 to be bearish for especially the first half. So an old indicator, the old timers used to use Caterpillar. I know this is crazy. I've heard multiple people say this. Caterpillar is an indicator of the economy because it would start dropping off before. You can't use that now. That's not going to work now. But what they did tell me, and I noticed this has been true because it was the first red January that I've ever seen. And this is all anecdotal. I don't know what's behind this or not. I just saw that it was true and it was something to consider. Is January can be an indication of what's going to happen for the rest of the year. If we're bullish in January, we're usually going to be bullish. If we're bearish, we're going to be bearish. I would never trade off that or go solely off that. But you can see, and look at that little shooting star right there at the top of the market that we had in December 27th, right about now of 2021. And the open candle for January, the first week, was red, going all 4 weeks red into late January, straight down. Look at that 1, 2, 3 up with a reversal candle right there, and down for 2022 was wild. False breakouts to the upside and downside, left and right. It was a fade the top type market and buying the dip type market. So definitely not taking breakouts in a market like that. But something to consider. Kind of looks like we almost have this is similar setup like we did a year ago from basically Friday. So I expect us to fill this gap and to come down to this volume support over here, this volume, somewhat of a volume shelf. And at some point in the year, I expect us to at least fill this gap right here. So this is my market analysis and what I'm looking at. This is it's a shame that I wasn't charting on long-term charts. I'm looking at other markets here on Friday, because if I would have saw this, I would have bought puts. By the way, before we end this video, we got a couple minutes here. My picks right here are going to be TLT. I'm already in. So interest rates run inverse. So they raise interest rates. Yield goes up. Face value drops. This is where they cut interest rates. Yield goes down. Face value rips. This is when we had hiked and then changed course and went into QE and cut rates. Then we cut rates with COVID, sent TLT ripping. TLT knew that saw inflation coming, right? I'm speaking like it's a person. And it started to drop off, created a head and shoulders. Left shoulder, head, right shoulder. And I got puts in the inverse TLT fund for the year of 2022. Paid me very well. And I was ready for the run up because they can't leave rates this high forever. We had a bear flag break. Bear flag breaks are usually bottoms. Bull flag breaks are usually tops. After it breaks and shoots up, after it breaks and shoots down, right? Like we broke over in here, and then we hit 2002 levels. Lifetime support. Everyone should have had eyes on this. This is a no-brainer. TLT doesn't have earnings. TLT can't go bankrupt. The Fed says they cut rates, TLT goes up. Very simple. But everyone's wondering where Tesla is going to go, or MU or JD. Oh my gosh. What about Lucid? Come on, guys. Gold. Gold runs inverse of the dollar. And 9 times out of 10. Gold has on the monthly here. Let's go over to a quarterly. I've never seen, I don't think anyone on YouTube ever use a quarterly chart. Usually because it's not going to show you anything, but we do have a cup and handle here. Let's go ahead and elongate it. Look how beautiful that is. Gold is at pretty much all-time highs right now. Runs inverse of the dollar. They cut interest rates. What do you think is going to happen? I believe it's going to go up. Does that mean it will? No. Have I been making investing in metals? Absolutely. I have absolutely been investing in metals. And I like to sell. That's going to be another video, what I do with the cash secured puts. But regardless, we've been building this cup and handle since 2011. That's the left side of the cup. The bowl for nearly a decade. And now we have the handle over in here with an inverted head and shoulders. Left shoulder, head, right shoulder. And we have this roof that we've knocked on the door 1, 2, 3, 4 times. And they're about to cut interest rates. So what could happen? So do I care where Tesla's going to go, or Nvidia or AMD? Well, if the market's tanking, they're probably going to go down with the market. If they're cutting interest rates, regardless of what the market's going to do, this is separate. It has nothing to do with that. It's going to probably go up. TLT is probably going to go up. So I can still be in equities and making money. But I'm not going to only focus on, junk stocks and stuff like that. Not that this is junk, but Nvidia, AMD, Tesla, and all the big names that the newbies like to look at. So look at that beautiful bullish divergence with lifetime support there after a bear flag break, and then the fundamentals after the TA of Powell confirming they're going to cut rates. If you guys like this content, make sure to like and follow for more.